Good afternoon, members, virtually present and present in auditorium. I am privileged to introduce our speaker, CA Jatin Christopher, sir. A. Jatin Christopher is a chartered accountant, cost accountant, and law graduate. He qualified in 1996 and specializes in indirect tax laws. He is a resource person for the Institute in its various post-qualification programs on indirect taxation and extends support to ICAI in publication of educational and research material by ICAI on various indirect tax topics. He is also a resource person for the government in conducting training for practitioners, trade, and officers. He has been in practice since 2000 as a partner in JCSS firm, a full service firm with presence across India. With this brief introduction, I welcome CA Jatin Christopher, sir. May I request Chairman to escort Speaker of the Day and also present him a bouquet. Over to you, sir. Thank you.
Good afternoon. This topic is of a lot of importance because it touches some very interesting areas of regulation as well as taxation. Do we know how an aircraft flies? There are two explanations to this. Bernoulli has proposed a certain explanation about lift, how when an aircraft reaches a certain velocity, it will experience some pressure differential and it is able to lift itself up in spite of its mass because of the teardrop design of its wings. Isaac Newton has also given an explanation. So the entire scientific community is not in agreement as to which of the two explanations is correct. But what does it matter to travelers or that industry? When discussing about virtual digital assets, I want to use this word only once today because I understand so little about it. That people involved in debating, deliberating on taxation aspects use the word blockchain. I understand so little about it, so I dare not use this too often in my deliberation today. It doesn't matter how this technology works. What we are concerned with is like what Michael Faraday told Prime Minister William Gladstone. He says, why do you need this grant? He was working on a research dealing with generators about electricity. He said, why do you need this grant? Of what use will come from spending so much money and giving you this grant? He said, I don't know what we will accomplish with this research, but one day you will be able to tax it. So when you look at it from that point of view, it is necessary for us to understand the behavior of virtual digital assets in the context of tax legislations. When you speak about regulation, in the context of virtual digital assets, it's very ironic because this whole ecosystem is decentralized. There are no intermediaries. There are no regulatory actors involved. It is so pseudonymous that you don't need to know what is your name. Your identity, your Aadhaar card is not relevant as far as doing transactions here because the transactions are immutable. You cannot go back on the transaction. But when it comes to taxation, when it comes to contract law, when it comes to the way we do business, it does not augur well with immutability. What I mean by that is, we write contracts keeping in mind that someone will break it. It is not that people are unsure what they should do. That is why they enter into a contract. A contractor bids. A contractee evaluates and awards the contract to a certain contractor. It is not that they don't know what they need to do. Both know what needs to be done. I have to build a road, you have to give me money. But we need such an elaborate contract because both of us are trying to outsmart the other to see how we will get the consideration without doing my obligation. Contracts, if you see, if people say this, especially when you're doing, people who discuss mergers and amalgamations, they go through such laborious term sheet discussions and then definitive agreements and so on. They're constantly keeping in mind that one small clause where the other person will default. So we are writing contracts because, damn it, we want to break it. You understand? But this ecosystem is so immutable that once you decide based on a certain protocol that this is how this transaction needs to go through, it will go through in that manner without any intermediaries doing something or approving something. So therefore, we now have to, the importance of this topic, I compliment the branch for thinking of this topic so early as far as the development of this law is concerned. And I'm sure this is not the last of the sessions on this topic. And I'm happy that this is a privilege that I have got to share some thoughts. It's more, I want to go on a limb and make some very clear comments about what I believe the GST treatment will work in respect of virtual digital assets are concerned. First is, when you look at virtual digital asset, we read the definition now that's available in the income tax law. 247A uses the expression virtual digital assets, means something, 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 something. When you say virtual digital assets, somewhere we are accepting this expression asset. If it was not to use the word virtual digital asset, but it had used the word virtual digital articles, the definition would not have been any different. So the meaning should not have changed. The TDS implication, the taxation under what 115BBH, that provision would not have undergone a change. So we require to keep in mind that GST will not derive any benefit from income tax definition. Point number one. The treatment we need in GST should not be influenced, even unconsciously, by the expression asset used in 247A. When you look at assets, somewhere in our mind we think it is goods. Can services not be assets? Should goods only be assets? Goods will be capital goods in GST. Services can be assets in accounting also. I have incurred a service cost that is so significant that it meets the definition of asset. You take our Ind AS also, whether it's on PPE or investment property or impairment standard or non-current assets held for, in all those standards, when you look at, asset is basically where the enterprise holds this outlay. It is under the control of the owner occupied. By past actions, you're able to predict future cash flow. If asset has that definition, virtual digital assets fail that definition. See, if I have, there's an outlay, I have bought virtual digital asset. I am not in a position to reliably forecast future cash flows. If I can't do that, it's not an asset. Intangible assets standard doesn't allow me to capitalize this mindlessly. I have to be very careful. So the point I'm trying to make is, first, the expression asset should not be assumed to percolate into GST unquestioned. GST will have to re-examine the use of the word the use of the word asset in virtual digital asset title. GST will have its own treatment. Now the question that comes up is it goods? Because in GST we are simply interested in goods or services. If it is neither, then there's no problem. Isn't it? Is it goods? I've seen some material out there to say that it is goods. For something to be goods, the litmus test is that it must be property. So when you come to the next question about what is property, we associate the word property with a thing. I have a phone, I have a watch, I have a car, I have a site, I have a building. We call these movable property, immovable property. Please bear in mind, property is not the thing. Property is the rights vis-a-vis the thing. I have certain rights in respect of that watch, in respect of that phone, in respect of that car, in respect of that building, in respect of that site. Therefore, it is those rights that are my property. And not the car, not the phone, not the watch, not the site, not the building. That is not the property. See, in a layman's language, that site is called property. But site is not the property. The rights qua the site is the property. For something to be a right, it must have the might of the state behind me. See, there is no right if I don't have the might of the state behind me. I own this car. If there is any infringement, then the might of the state is available for me to prevent the world at large from coming in the way of my enjoyment. So you understand, property is actually not the thing. It is the rights qua the thing. So when we're talking about rights, I need to know if that right is a right only when it is recognized in law. In a decentralized ecosystem, we don't need law. So you understand, when there is no right, there cannot be any property. When there is no property, it cannot be goods. From a GST point of view, if it is not a right, it will not be a property. If it is not a property, it cannot be goods. That's all. So therefore, very clearly, virtual digital assets cannot be goods for the purposes of GST. Next, when we look at money, 2H defines money, Reserve Bank of India Act, that it has to have the sanction of the state to get recognized as money. In the definition of money in GST, we have Indian legal tender, foreign currency, all the various negotiable instruments that we are familiar with, and any instrument recognized by Reserve Bank. What is this instrument recognized by Reserve Bank? Under Payment and Settlement Systems Act 2007, prepaid instruments are recognized as money. Once it is recognized by Reserve Bank, it becomes a money for purpose of GST. So what are those instruments that are recognized by Reserve Bank? There are so many expressions for this. We'll simply differentiate the two as stored value. I have to deposit money, fiat currency. I have to deposit money and I will get something. A prepaid card, prepaid document, or an electronic representation. If it is stored value and recognized. See, many people who have not taken approval from Reserve Bank of India may also collect money. Kalyan Jewelers collects monthly scheme. Every month you deposit 5,000 rupees. At the end of a year, you pay 11 installments. At the end of the year, you can buy something for 60,000 rupees. Now, are they running a prepaid instrument? No, it is advance for future sales. That's all. Because how do we identify that? The issuer and the redeemer are the same. The issuer and the redeemer are the same. You give it to me, you have to come to me only and buy that jewelry. You can't go to somebody else and Joy Alucas and buy that jewelry. That you cannot do. So when you identify whether it is money, is it stored value? I should be able to deposit money and then I will be able to transact. Paytm wallets, all those digital wallets which you have will also take that same color. Then we have to identify something that has the optics of a digital wallet, but is not approved by Reserve Bank. For example, if you go to any store, they will give you a coupon. All right. They give you a coupon which you can redeem for a certain price. If you buy something for 500 rupees, with this coupon, you will be able to utilize 50 rupees out of this coupon, and the remaining you have to pay in cash. So you buy something for 500, you pay 450, you surrender this coupon, your transaction is complete. Since the issuer and the redeemer are the same, and it is not stored value, it is nothing but future discount in this coupon. So this coupon is not money as per GST, because it is not recognized by Reserve Bank of India, because it is not stored value. You didn't pay 50 rupees to get this coupon. You didn't pay 50 rupees to get this coupon. So therefore, it will never take the character of money. So therefore, if you leave out these coupons and we stick to money, we only have to identify stored value. When I deposit money in my bank account, my relationship with the bank is that of a debtor and a creditor. That money is not the bank's money. That money is my money held by the bank in trust. When I take input tax credit, it is my money held by the government in trust to give it back to me when I enter into a liability of equal or greater value under the same law. I can't adjust ITC with stamp duty or income tax. So therefore, if you identify, it is not stored value. So now we have three categories: stored value, value to use, or these rights. It must, all of them must have legal recognition. Legal recognition means that I should be able to go to court and bring an action. If no court will entertain my plea, then I have no right. It is only an illusion. I think I have a right. Huh? It is like someone's reputation. It's very transient. We should not get too attached with it. So therefore, if you look at it from that point of view, if I can't bring action against it, then there's no question of it being a right. When it's not a right, therefore, it will not take this character. So it's not goods, it's not money. Is it actionable claim? Because actionable claim, it's advantageous to treat something as actionable claim in GST, because in Schedule 3, actionable claim other than lottery, betting and gambling is excluded from GST. So if I somehow manage to call myself actionable claim, then I will be free from GST. See what happens when you're interpreting GST. The tendency is to have one goal in mind and read the law to reach that goal. Reaching that goal should be a byproduct of reading the law. Law should not be the reason to reach the goal. All right, so we look at it. So therefore, there's a lot of material out there to say that this is actionable claim. My question is, Section 3 of Transfer Property Act and 130 both take us to the point of identifying actionable claim is beneficial interest in movable property, not in possession. First of all, it is not property. Two, for it to be a claim, who do you bring action against? There is nobody on the other side, because it is decentralized. So it is not goods, it is not money, it is not actionable claim. If you look at the definition of services in GST, beautiful definition. Services is a noun and not a verb. If it is a verb, then you have to understand what service has been performed. A singer provides a service, a teacher provides a service, a doctor provides a service, a mechanic provides a service. That is a verb. But in GST, it's a noun. It has a definition to say service means anything. Anything includes everything and leaves nothing. So service is not a noun. It's not a verb. It's a noun. So there's no need to investigate what exactly is the landlord doing for the tenant to call renting a service. That becomes interesting to discuss. Service means anything other than goods, money, securities. So takes us to a quick discussion about what is securities. When a share certificate is printed in the printer's factory, it is not a security. Like a checkbook printed by a printer, it is printed paper, chapter 49. It is not securities. But once you fill the details, the account holder fills the details, hopefully it has my name as the payee, it will become a negotiable instrument. It is no longer printed paper. Why? Because the check with my name as the payee, amount, date, signed, everything valid, I become entitled to that as a negotiable instrument. Similarly, share certificate is not that piece of paper is not worth lakhs of rupees. What that paper represents, and what recognition such representation receives in law. I am owner of that company to the extent of this many shares. That is what this paper represents. So therefore, nobody got so emotional once shares became dematerialized. It doesn't matter. In my account, if I see that many shares, I don't have to carry this certificate. Once it's in demat form, it still represents the same thing. So therefore, to be security also, here also we have a definition, 201, takes us to 2H of SCRA, where it says that it must be listed in Securities Contracts Regulation Act, that it is a security, then and then alone it will be securities. Not goods, not money, not actionable claim, not securities. Therefore, it has to be service. Virtual digital asset, therefore, has to be service for the reason that it is none of the above. Does it mean it is taxable? No. Before we assume it is, because it is service, should we assume it is taxable? Spoiler alert, no, it is not taxable, because in 1985 AR, Supreme Court said in Govind Saran Gangasaran's judgment that there are 4 aspects that are required. The levy of the tax, the measure of the tax, the valuation, and the discharge of the tax. We need all these ingredients to exist before any incidence of tax can arise. I read somewhere that Amitabh Bachchan was asked to pay 1 crore of tax on NFTs of his late father's poetry recorded in his own voice. What internet did to copyright law, this decentralized system can do to securities law. NFT is not copyright. You understand? NFT is not copyright. The copyright is in the manuscript, copyright is in that recording, copyright is in that picture, copyright is in all those things, but not NFT. So when people say we don't need the government to interfere in internet economy, especially in this decentralized economy, we don't need government interference. Government is not interested to interfere. Government's interference will be required in 3 situations: fraud, crime, against the state or against the subject. We need the government to interfere for our own interests. Can we function so autonomously that we don't need the government at all? Because this whole system of having a regulator is because there are certain touch points where there is a role. The might of the state needs to step in certain instances. For that reason, we need it. Involving virtual digital assets, is it possible that none of these 3 things will ever take place? Will there never be a fraud? Will there never be a crime against the subject? Will there never be a crime against the state? So we will require this. So if you look at it from that point of view, do we need regulators' involvement? In these 3 areas, at least there is a need for the regulator unless the decentralized ecosystem is able to regulate itself and protect itself. So when you look at it from that point of view, to bring virtual digital assets to tax, I don't know how someone decided to recover tax from Amitabh Bachchan in that transaction. Maybe someone has really applied their mind and come to a different conclusion than what I have come to, and advised him to discharge tax. I'll explain to you, even from a GST point of view, why none of the transactions that we read about in the media should have been taxed. There was an exchange that apparently paid some 40 odd crores in tax. Then there was, there are individuals who have been pulled up and they have discharged some tax to say that they wanted to buy peace, they didn't want litigation. Those are not the right reasons, because if someone enters into a compromise with the department and discharges tax, does not become case law. So if you look at from that point of view, in GST, if it is a service, we will need to find out 9(1), 11(1), then only we will need to understand what is the rate of tax. See, if we don't have a rate of tax, there may not be any tax to be paid. If you see 11/17, which is a notification that prescribes rates of tax for services under 9(1), we'll find that there are several entries. Where will you classify virtual digital assets? I'll come to the transactions involving virtual digital assets in a moment. Where will you bring them to tax? Becomes the question. Will you tax them as financial instruments? No. Will you tax them as business support services? You can't. See, just because every entry has other than the above, not elsewhere classifiable, does not mean you can bring anything that you cannot find a specific entry into that residual entry. The residual entry requires that you need to show within the common genus, this must be a species. See, when you say lion is also belongs to the cat family, tiger also belongs to the cat family, your domesticated cat also belongs to the same family, but there is a lot of difference. This one will get eaten up by that one. So look at it from that point of view. We cannot simply say everything will fall within this residual category. So therefore, we travel from all the entries 9961, 9967, 9972, 9983, 9985. If you go on and on, you will come to 999,799. Others under others. As accountants, we understand the power of this others. Miscellaneous schedule, under that there's something called others. Basically, everything is there only, isn't it? Can you fit virtual digital assets in that others? If you see that classification 999,7 and go all the way down to 999, other services not elsewhere classifiable. It is a species of that genus 999,7. 999,7 covers tolerating an act, agreeing to an act, tolerating a situation. If you see that family, this cannot fit into that. You cannot fit a fish among tigers. Just because it is not elsewhere classifiable does not mean everything else will fit into that heading. If that is true, then 999,7 should be all encompassing. It is residual because it is residual. So therefore, I feel virtual digital assets will be services not classified. When they are services not classifiable, what should the government do? Take entry 35, other services. Other services is that entry 35 in 11/17. Washing services, cleaning services, and other miscellaneous services not elsewhere classified. Can we say virtual digital asset is in that common genus of washing, cleaning, and therefore you can't do that. So therefore, in Bata, India, Supreme Court said in the context of central exercise, the existence of an entry in the tariff arouses suspicion about the levy. First you establish levy, then we will see. Merely because something is classifiable here does not mean it is attracted by the levy. If levy is attracted, we'll come to what is the levy in a moment. About classification, services not classifiable. That becomes my assessment of virtual digital assets. Government should do one of two things. Either they should split entry 35 and say Roman number 2 virtual digital assets, because they have done something in income tax. Virtual digital assets should come as Roman number 2. When an entry is split, does it mean it is an insertion or a bifurcation of what was already included? That debate is not yet over in several entries. So this also won't be resolved so quickly. It is not so open and shut. My reading is when such a specific entry is made, they better make it in 35 and not by inserting 35A, because it will have new consequences. All right. When an insertion is made, that insertion will be prospective. I've heard about some reports that there's a tendency to think of virtual digital assets as goods. All right. Some paper has gone from the Economic Intelligence Bureau of the government to CBIC to evaluate, etc. My thinking is that government will profit greatly to continue to classify it as services for 3 reasons. Reason number 1, cross-border trade takes place. if it is goods, export and import of goods is very differently treated in GST compared to export and import of services. GST can be better administered with respect to virtual digital assets if it is treated as services. Second, place of supply, time of supply provisions are more robust as far as services are concerned than goods, because if you start asking for e-way bill, then we are finished. Isn't it? So therefore, the law as it is laid out is more robust to deal with intangible, what are the virtual digital articles, than if it were to be classified as goods. The third is import and export of services is tied to foreign currency criteria. It's tied to foreign currency criteria, especially export of services. So therefore, if someone really believes something is zero rated, it has to be very clearly, safely dealt with if it was services. But I don't know, government's wisdom will prevail as to see how this will happen. The next part of what I want to share with you is, there are two aspects of virtual digital assets that we have to look at. I'll give a small parallel, then we'll come to virtual digital assets. There is a land loser, someone whose land has been lost for some development activity. So the public authority issues transferable development rights certificates to the land loser. So here is the first place where these rights are being created. This becomes an instrument which is tradable. This TDR certificates is now tradable. On creation, what is the tax treatment? On transfer, what is the tax treatment? Both are different. On creation, there is no incidence of tax. On transfer, there is an incidence of tax. If you look at the ECJ decisions in 2005, October, Hedquist and so on, several European states have come to the conclusion that there is no tax because it is exempted. I would sense that the conclusion that no tax is applicable was not because it was non-taxable. The conclusion that it is not taxable is because it is exempt. Existence of exemption itself establishes to me that it came within the mischief of the taxing provision. That becomes very significant for us to take from those provisions, those decisions of ECJ. If you look at how these transactions takes place in virtual digital assets, is on creation what happens and on transfer what happens needs to be examined. In each case, it works differently. On creation, how does it get created? I will pay fiat currency, I will buy some currency. I will pay fiat currency. I will pay, I don't know what is the going rate. It's in lakhs, people say. I pay so many lakhs, I will get one coin. I will take this coin and I don't know what to do with it. Those who know what to do with it will do what can be done with it. So on creation, what is the transaction? Please bear in mind, GST needs to recognize that this is a barter. This is a barter. By inserting 35 Roman 2, this becomes clearly a barter transaction, and I'm giving money to get this service, so therefore the rest of GST can flow. On transfer, what happens? Conversion from one form to another form can get treated suitably. Today it will not get treated because it is service, not classifiable. If you look at how transactions take place in transfer, I'll give you three situations. I was in respect of this session, I was reading up and I came to realize so many interesting things that goes on. New businesses, the funding is in crypto. The spending also is in crypto. The simple thing about our double entry system of accounting is money measurement concept. If the transaction is not denominated in legal tender, you are not supposed to pass double entry. But GST has left a double entry behind and gone far ahead, because barter and exchange transactions which do not require money, double entry accounting, are still liable to tax. So therefore, when the transaction cannot be denominated in money terms, you cannot have any accounting entry. So let's not even look at accounting books as providing any intelligence to determine these transactions. So when you look at these transactions, you will find that the investment takes place in crypto, the expenditure also takes place in crypto. Then what do you do to these transactions? There's this concept, very old concept in Powell versus Upton Town Council, very old judgment. In this judgment, this concept of implied contracts was highlighted. The conduct of the parties can bring about the existence of a contract. Contract need not be written, isn't it? Written is one of the ways in which a contract can exist. It can be unwritten also, but the parties' behavior is in such a way that there is a contract. A company proposes a new business and an investor decides to invest in crypto. This company accepts that crypto, and maybe it is a smart contract or a not so smart physical contract, but there is a contract and the parties seem to be understanding that is the contract. Since it is not securities, there's a taxable event there. Now there are employees who come on board. There are contractors who are hired to come in and work on this project. They are remunerated in crypto. Then what happens? They are remunerated in crypto. If there is a master-servant relationship, and the employee admits that he has received salary, 192 should kick in. It is because 192 is attracted, GST won't apply. If you don't establish the master-servant relationship, the protection available in Schedule 3 will get denied. So therefore, employees taking salary in crypto will attract tax. If you see the TDS provisions in 194S, it uses the word sum. Sum is akin only to monetary consideration. So many instances, TDS provisions also may not be able to survive. You see, that's what Mr. Sachin was really impressed that he is taking this topic on income tax relating to the provisions on virtual digital assets, because the issue is still so nebulous. I'm not so sure that 194S, etc., will not undergo any amendment to get seriously implemented as we go along. It's not like everything is fiat currency with cryptocurrency transactions. There is crypto transactions also taking place. Then what happens to 194S? The third aspect is the person who admits that he has received this income, what does he do with it? He will either spend and buy goods and services, or he will trade with them. So when you look at it from this point of view, the income tax provision comes in to say that 30% will be the tax, etc. But my question is, every transaction, there are two aspects in this transaction. There is a salary received, which I am holding and then disposing to realize gains from that. It may go up, it may go down. I heard this NFT of Twitter, the Twitter founder's NFT, which was sold apparently at $29 million, $2.9 million. At $2.9 million, it was sold at, and then recently there was a bid as to what price it should be sold for, and 7 bids came in, ranging from $6 to $277. I don't know what auditor is going to be able to account this expense. Once you pay fiat currency, $2.9 million or $29 million or whatever you spend, how will the auditor account it? To my reading of these transactions, future cash flows cannot be forecast with any certainty. It's not goodwill. It's not, an asset from that point of view, for the reason that it is not a property. This is an outlay. That much we are sure. There is an outlay in fiat currency, and what do you do with it has to be dealt with based on its fair value measurement year on year. The erosion in value will be a period cost that has to be dealt with in normal course. So when you look at it from this point of view, transactions are taking place not just fiat to crypto, but crypto to crypto itself. So those transactions have 3 challenges. One is that it should not be recorded in the books. Not that it will not be. It should not be, because it will violate money measurement concept. There is no trail for this because this happens through cold wallet, hot wallet, etc., etc. And the third, the only reliable basis is that the parties' contracts. So I don't think this is a situation where someone will come and say, I will investigate this. I will investigate this and then extract GST revenue. Please bear in mind, Section 67 of GST law very clearly says, if the government wants to investigate, there must be an evasion of tax. 67(1)(a) talks about 3 situations where someone has suppressed supply or stock, claimed credit beyond entitlement, or contravened the act or rules to evade payment of tax. If there is no evasion, there cannot be inspection. If there is no evasion, there cannot be inspection. Every non-payment of tax is not equal to evasion. I may have entertained an interpretation that results in no tax liability. I have come to an interpretation that virtual digital assets are services non-taxable. I have not discharged tax. How can DGGI at all investigate? They cannot investigate. They have no jurisdiction. But the trouble is, to buy peace, very low tolerance for litigation, taxpayers are coming forward to discharge tax. But I don't think the reports of how taxes have been collected in this sector till now is any good indicator of the correct interpretation of this law vis-a-vis virtual digital assets. So far, I think people have made a mistake in discharging taxes. Amitabh Bachchan needs advice. That stock exchange needs advice. The currency exchange needs advice, because they're all coming forward, because these are all well-meaning businessmen who are completely, they lose their senses the moment they receive summons. And we know the reality that summons in most of these instances means nothing. When you look at it from that point of view, that aspect has been wrongly interpreted. And I'm going out on a limb here to make the statement very clearly that the interpretation reached by trade till now vis-a-vis virtual digital assets is wrong. Totally wrong. Secondly, the investigation being conducted is also lacking jurisdiction. There is no evasion. If you want to canvass an interpretation that is innovative, that you want to say this is goods, you want to say this is taxable services, you have to come in only through 65, conduct an audit, collect the records. 67, I don't think is the route. So therefore, DGGI enforcement should never have entered this territory for want of jurisdiction. Not even Section 160 subsection 2 will be able to save investigations. So the main requirement is for taxpayers to make their application under 6710. Once an investigation is concluded, whether they have paid tax in the middle of the night, so-called voluntarily or not, it makes no difference. Make a very clear application under 6710, because 6710 imports the entire jurisprudence available in 165 of CRPC into GST to see how did they go about conducting this investigation. Moving from there into the third aspect of exchanges. Today, everyone talks about exchanges being straightaway liable to tax. Exchanges are intermediaries. Exchanges outside India are also intermediaries, but not OIDR. If you look at it from this point of view, let's look at how GST taxes intermediaries. Tax on intermediaries, you don't have one HSN code for all intermediaries in GST. There is no single HSN for all intermediaries to fall within one category. If you are a transportation broker, 9967, that is your HSN code. If you are a real estate broker, 9972. If you're a financial instruments, securities, bank deposits, insurance broker, if you're any financial instruments broker, 9971. If you are a business support provider, 9985. So please bear in mind, it is not possible to demand tax in GST from exchanges saying you are an intermediary, some HSN code will apply to you. It is like saying you have committed a crime under Indian Penal Code, so you are arrested. It is not possible. Govind Saran's judgment very clearly says you have to tell me exactly what I did. If they say I am 9967, I am not goods transport business. If they say 9972, not real estate. If they say 9985, it is not business support. So they have to pick one HSN code, and I'm afraid in all the instances where exchanges have paid tax, they have not bothered about what is the HSN code because they're happy paying 18% tax. To me, it is service not classified. Service not classified. When the rate of tax is not there, this is Srinivasan. There cannot be a levy of tax. So therefore, what happens is, when you say you are a broker, you have to be a broker of something. If you are a broker, you are a broker of something. That thing must be established and not disputed by both sides. I must be a broker of what? Goods, money, securities, services, real estate. Ultimately, if you see, to be a broker of something, it comes down to the same four things that we have seen so far: goods, money, securities, actionable claim. None of those things being established, it's not possible. Today, I've seen so many, I'm sure you've seen in service tax also. Your service tax returns has some turnover, your 26A shows some turnover, so therefore it is, the differential is a service liable to tax. There is no adverse inference that can be drawn simply because you could not explain yourself better. Please bear in mind, GST is a self-assessment tax. GST is a self-assessment tax, and I have made an assessment who the exchange or the person who has bought and sold virtual digital assets. I have made an assessment that my liability is zero. If the revenue believes that my self-assessment is incorrect, government cannot make an allegation and stop at that. They have to produce a mountain of evidence to impeach my assessment. If you see section 155, very clearly it says, any person who claims input tax credit, the burden to prove entitlement to input tax credit rests on such person. Which means the burden to prove all other things does not rest on such person. Who does it rest on? Department. But what is happening here is section 58 of Evidence Act very clearly says undisputed facts do not require proof. Taxpayer is failing to dispute assumptions thrown at him. Taxpayer is failing to dispute assumptions thrown at him for the reason that in trade, certain terms are used to describe the business. I will call myself a crypto exchange. When I say I am a crypto exchange, am I describing my business from a business point of view, or am I describing my business from a tax law point of view? Is this what I am called? I keep giving this example very often. There was an e-commerce company that was picked up for audit. And the audit party required the company to give a description of their activities. So the director of the company, the manager of the company who got this query from the department launched into a very detailed deck he prepared describing his business. So he prepared a deck, sent it to the department. Department did not admit that that is the accurate description of the business. The taxpayer is describing his business based on the skills and the competence they bring to the market. Accountancy or taxation looks at principal source of revenue. They concluded the audit saying that you are a commission agent. So he was very distraught at this, saying that I have studied in IIT, I've done this, I've done that. You see my software, it has these capabilities. We use a lot of intelligent analytics to arrive at what we do, but how can you relegate me to a commission agent? The principal source of revenue dictates the classification of your business. If you see red herring prospectus of Google that was filed many years ago, they don't say they're a technology company. They say they're an advertisement intermediary. LinkedIn says that they are a HR intermediary. What they do is not what is relevant to decide their HSN code. What is their principal source of income? The principal source of income for this e-commerce company came from commission business. So therefore, they are classifying themselves on that basis. In GST, a businessman's description of his business is an unreliable source for classification. There was an investigation in Jaipur a few years ago. It was an IT company. They were exporting their services to a customer in Europe. The investigating party issued summons to the director and they asked him a pointed question: what is your place of supply? He said, my place of supply is Jaipur. To the businessman, the expression place of supply does not appear to have any legal significance. To a person, place of supply is akin to place of business. So he said, I'm working from Jaipur, so therefore Jaipur is my place of supply. Show cause notice was issued. 53 crores was the demand of tax, stating that the director has admitted that the place of supply is Jaipur. Since the place of supply is not outside India, export of service benefit is not eligible. You cannot rely on the director's admission to prop up your demand. But today, if you see what we get to see in the media reports, it's essentially the investigator's question and the director's response. When did the director become a subject matter expert? People who come and take opportunities to talk about GST in seminars are afraid to call themselves experts. When did the director become an expert that he will make a self-incriminating statement and that forms the bedrock of the notice? Please bear in mind section 136 of this law. There are 5 situations basically to say that unless the person who has made the statement has died, his statement is of no relevance. Directors are so anxious. Summons, my goodness, it's an offense under 193 and 228 of IPC. What will happen if you violate this provision? What should you do when you get a summons? When you get a summons, you have to attend and truthfully state what you know. Most often, they don't know anything of significant value for GST purposes. They may know other things. What does a businessman know about his business? In relation to GST, about his business, he may know many things, but I don't care. In relation to GST, what does a businessman know? People who pretend to know GST don't know much about GST, isn't it? So therefore, if you look at it from that point of view, statements made by directors have no value. All right, directors should not make statements. When you make statements, please understand there are 2 things: fact, interpretation of fact. In our mind, both are one and the same. Why didn't you pay GST? It's an opinion. Any answer to that question will be an opinion. Why didn't you pay GST? Any answer to this question will be an opinion. I did not pay GST because it is not taxable. I did not pay GST because it is a security. I did not pay GST because I did not know that I had to pay GST. Everything is opinion. Did you pay GST? The answer will be factual. Yes or no? So therefore, please differentiate when questions are put, is it a fact or a statement of opinion? I have committed murder. Is a statement. I'm not, it's an example, please. I have committed murder. Is this a statement of fact or an opinion? Is it a statement of fact? A client comes to an advocate and very in strict confidence confides in him and says, you know, sir, I have committed murder. The advocate knows better to take this statement. Is it a fact or an opinion? It cannot be a fact because murder has a definition. Definition has ingredients. Ingredients require evidence to substantiate them. After applying all these principles in law, one can come to a trial courts are struggling to come to this conclusion. Here, this client has already come to this conclusion. So clients don't know. Clients don't know. I have committed murder is not a statement of fact. It's only an opinion. Why didn't you pay GST on virtual digital assets? Any answer to this question has to be unreliable. And if a show cause notice is constructed based on that, then I'm appalled. If that is all, there is on the other side also. All right? That is why there is an untold hurry to pay tax before show cause notice. Come forward. Discharge. Amitabh Bachchan also paid. If Amitabh Bachchan only paid tax, what should all of us do? Come forward and pay tax. That is not the way law works. If that is the way law should work, then let's take this book, tear it up, throw it away. You tell us how much tax you want. We will start discharging it by 20th of every month. Why are we wasting our time discussing supply, time of supply, place of supply, valuation, ITC, returns? Why are we doing all these things? If rule of law has to prevail, then you have an obligation to explain to me, bring my transaction within the 4 corners of section 9. And my reading of this is that it is a service, not classifiable. Therefore, there cannot be any incidence of tax. All those who have paid tax so far have been very enthusiastic. I hope they have bought peace. If that was the reason why they have discharged tax, going forward, what will they do? this is not the end of investigation. If they thought they bought peace forever, this is not the end of investigation, because even if you take any of these taxpayers, they're to be an agent, you must be appointed under a contract. 182 talks about appointment of an agent. Who appointed this agent? The agent thinks he's an agent. The agent thinks he's an agent. He probably is an information portal, passing on information and receiving some information. So when you look at virtual digital assets, I think we should go back to look at first principles, because it is this law that has to apply to this transaction. It is not that there is a new law. If the government were to come forward and include it in the definition of securities, include it in the definition of money, include it in the definition of goods, include it in a in third schedule, do something else, then all what I have said so far will be of no value. But if the law does not undergo any change, as the law stands today, I don't think there is any occasion for any tax to be discharged on all transactions in this sector. But there is great enthusiasm. Perhaps it is confusion, perhaps it is clarity that I don't possess. But as we see it, these are still early days, and I'm very grateful to the branch for giving me this opportunity to share some of my thoughts. I hope this discussion will go forward, and I hope that I will be able to learn from questions that may come today or even later to understand how these things will unfold. But certainly these are early days, and this sector, virtual digital assets, now stands in the crosshairs of revenue because of the sheer value of the transactions that are taking place. These are still early days. We will see this develop in the form of notices, clarification, amendments, perhaps even decisions that will come out. But it requires us to pause and consider, because somehow when anything new comes up, there's a great amount of anxiety, and GST has really taken this a few notches higher. There's a great amount of anxiety as to how should we tax it. We are always trying to find how to interpret it in a manner that it does not become taxed. With a goal in mind, if we start reading the law, then we might lose sight of the first principles. If we read the law based on first principles and the outcome be left to this exercise, I think we'll be in a far better position. And this works for both taxpayer as well as the tax administration. This is a new area, and I think there's more to come as far as deliberations on virtual digital assets. Thank you all very much. Yes, please. Who will you enforce it against? It's in your wallet. It's in your wallet. Who will you enforce it against? Two aspects I have learned during my study of this business. Wallets are also not free from being infiltrated and past public-private key being lost, etc. Hot wallets, cold wallets, many things are there. Different physical ways and electronic ways are being found to keep them separate. But who will you enforce? A right is a right only if the might of the state is behind you. The might of the state is not required in a decentralized environment. So therefore, I feel it is not a legal right. So see, what happens is, let us assume that somebody has appointed this exchange. He should not be a self-appointed actor. This exchange should not be a self-appointed actor. Someone has appointed him to be an agent, and with him you have a transaction. What you can go after him is for the promise he made to you, for your fee which you pay. What is it that he was supposed to deliver? To that extent. But what we are looking at, the cryptocurrencies that fall into your wallet, what is that? That is not a right in my view. So therefore it may not be enforced. See, one thing is that it is immutable, Another thing is that it is enforceable. Nobody can lie in this system, in this ecosystem, because of smart contracts. Nobody can lie and get away. That is the premise in this system. But what we require is we need a defendant on the other side for you to be able to bring action. There is no defendant on the other side. That is my concern. Any other questions? Right. So they are not an exchange then. No, we look at one transaction. They have purchased it themselves and they are selling it themselves. So first of all, they are not an exchange. So you're doing a transaction. You, let us say you give fiat currency and you get a virtual currency. Now the question is not, did you really pay them? Of course you paid them. What did you get in return? My reading is that it's a service non-taxable. What you received, is it an asset? By all the standards that we have been trained to understand, it is not an asset. It does not meet the definition. So therefore, it's an outlay. That much I agree. You have incurred an outlay of so much, but what you received is not property. Right. So what is your question? My dear, you have given me a lot of material that is not relevant to the question. What is your question? There is a person who is a company which is an exchange. In this instance, they are not conducting themselves as an exchange. Fact. That's the only thing we're looking at. In this transaction, they have taken a commitment from you. They have given you a commitment that they will sell you so many coins, and they don't have it with them to sell it to you. So they will, in turn, you said, they will go and purchase it from somewhere and then fulfill this contract. So I have understood the facts. What is the question? Correct, because they are not acting in capacity of an intermediary. So therefore, that transaction will not be a transaction involving an intermediary. So what is the question now? About taxation, what is the question? All these transactions, I said, will not be liable to tax. All these, I've already said this blanket statement, all these transactions will not be liable to tax. The transaction is receiving fiat currency less than the traded price of the coins that they are giving you. They are eating a loss. That's all is the transaction. There's no incidence of GST here. They are providing you a service, not classified. You are paying them fiat currency. That's all. See, we have to unbundle the information that we receive from client, because you give us so much of information, but actually if you steer clear of all the additional information, really what happened was, first of all, he was not an agent in this transaction. Secondly, he made a commitment to you. Therefore, for some special reason, he decides to buy it at a premium and fulfill this obligation. So therefore, you'll be able to arrive at it. See, follow first principles, you can't go wrong. That's my submission, sir. Right, right. Right. It's a very intelligent question, and I have to be very careful in the answer. I will answer this. Section 54 provides the right to make this claim within 2 years. All right. Next aspect is certain admissions made by the taxpayer will work against him. So you need to examine at the time of discharge what admissions have been made, whether those admissions can be retracted. The reason for claiming refund is not only to get that money back. The reason for claiming refund, in my view, should be to set the record straight for the future. As far as virtual digital assets are concerned, the potential that I can understand it has, these are still early days. What can be done with this technology is completely different. It's completely different. All right. What the Wright brothers discovered was not for people to clip on wings and start flying around. Something significant was contributed to the entire world economy by what was discovered there. So therefore, if you look at it from this point of view, there's far more potential here to this technology where it can be used. And I think government should embrace this technology, see how it can actually make sure that state or the subjects don't get defrauded or crimes are not committed, etc. Because that no one wants. Even the people who champion this this whole technology and advocate that it should be allowed to freely be used by everybody, even they will endorse the fact that they should not be used for illegal purposes. So when you look at it from that point of view, government should get involved to the extent they need to get involved and let this sector thrive, because if it does, one day they'll be able to tax it. Yes, 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 yes. As far as how you'll disclose in your returns, is it? Oh, you've gone so far ahead. Sure you could, sure you could. No, I think they have paid on their fee. See, in GST, what happens is there's no classification, residual classification for all intermediaries. There is intermediary for real estate, intermediary for financial instruments, intermediary for shares, insurance products. So you have to tell me what I am an agent of. I am an agent, all right. Let's say, I don't agree with that, but let's say I am an agent. What am I an agent of? That has to be established before tax can be brought. See, I'm afraid business support services cannot be such an all-encompassing classification. It has to be for a business, it should provide direct support to it. And if you see the explanatory notes under 9985, it has very limited field of operation. I spent some time on 9985 also. I don't think what exchange is doing are able to fall. You know, look at it from a point of, I'll share another insight. I don't know if I'm overstepping the time. I'll just share one aspect for you. Let's say department issues a show cause notice. Let's say department issues a show cause notice saying it is 9985. All I have to prove it is 9983. The demand will get dropped. Because you can't cure the show cause notice. Brindavan Beverages has said that show cause notices cannot be cured, and 75(7) is very clear. The grounds on which the notice is issued, the demand has to be confirmed only on that ground. All that I have to show is it is not 9985. And I would think today the most difficult job for department is to draft a show cause notice. Let us today, like you seem to suggest that what is this? I thought it is a slam dunk. Intermediaries should have paid tax. The greatest challenge is for department to draft a show cause notice. I feel that they will not be able to draft a show cause notice that will stand the test of the ingredients required in Govind Saran Ganga Saran's judgment. Yeah. Absolutely. 100%. In fact, I'm interested in show cause notices where they have picked the wrong HSN code. I'll just give you an example. I got a show cause notice demanding GST on amortization. How can you have 16 crores of amortization? No, that is too much. So there was no answer to give. How can you have 16 crores of amortization? I don't agree. It is supply. If it is supply, then it has to fit within some section, some provision. So they said 7(1)(c), Schedule 1, permanent transfer or business or disposal of business assets on which ITC has been taken. So a show cause notice was issued. So we are asking during the course of the audit, saying, how will you tax it? So he said, what is your normal HSN code you use? This is a telecom company, so 9983. So he said 9983 is the HSN code, and they issued a show cause notice. The moment you saw the show cause notice that says on amortization there's a tax at cost plus 10% under HSN code 9983, the defense was very simple. Para 4B of Schedule 2 says when there is a permanent transfer of business assets, it is a supply of goods. So the reply was, see, there's no point in debating things that is not necessary to debate, because if you have to explain to him from amortization till CA final, so first PUC till CA final, you have to bring him up. So it's not possible. So short reply is 9983 is not correct because of para 4B of Schedule 2. Go. That's all. See, we think that a long answer will get us relief. Invariably, a long answer is a wrong answer. You might find this, and this is certainly a good thing to consider. If it doesn't fit within what you believe is the right classification, you only have to argue that the classification they have proposed is not correct. And I've got relief, favorable answers in adjudication. I was so surprised that in adjudication we're getting favorable answers. Thank you all very much. Because their answer is, then why is there a HSN code 7171 taxable? Section 9 does not apply services in the universe. But the UCP guidelines needs to cover everything. Just say classification does not mean levy will be established by classification. Levy has to be first established, then we can go to the find the data. Here we have instance where there is a levy but there is no classification. But yes, I've heard this number of instances where but I think that state only is doing it, and the state has from February or March discontinued this practice after some internal consultations. The proceedings have already got initiated that will bring it to some logical conclusion. But no new proceedings are being taken up on this.
Thank you, Jatin sir. I hope the members had a very interesting eye-opener on the indirect taxation aspect of the subject today. I request our chairman to hand over a memento to the speaker as a mark of gratitude and respect. Thank you, sir.